Welcome back, YouTube. How's it, guys? I hope you guys are doing well, and welcome to this next video series. And today we will be talking about candlesticks and time frames for Forex. So let's get straight into it. Here we go. Candlesticks and time frames. So I'm just going to give you an example and explain a couple of things about candlesticks, and then we'll move on to time frames. Okay, cool. So what we're going to speak about is liquidity wick, range, price movement in a candle, and candles with no wicks. Those are the things we're going to discuss. Let's get into it. Alright, so this candle here is the body of a candle. This green candle represents a bullish candle. Over here we have the open of the candle. So this is where the candle opens. Alright, and what we have here is the price, for example, 145, 100. So this candle makes its way down, as an example, makes its way down, creates a low, okay, moves up, comes back to where it opened, okay, then it starts to retrace itself back up, creating this body, which is what we call a body. Okay, it keeps moving past this price, comes up, creates a high, okay, comes back down and closes here. Now this candle represents a bullish candle. The open of this candle, let's call it the price of 145, 100, and the close of this candle, we call this price being 145, 150. The reason you would also call this a bullish candle is, as you can see, price closing higher over here than what it opened at over here. So we opened at 145.100 and we closed at 145, 150. You see how easy it is, guys? A bullish candle and price movement. This is me giving you price, the opening of a candle, creating a low. Now creating a low, coming back up to its entry. Over here, what do we call this here? Is a liquidity wick. Let's just erase everything here so we can discuss this. Okay. So what we call this here is a liquidity wick. So because price is moving up, what we say is price moves down, moves back up. We call this a liquidity wick so that it can gain momentum to continue moving up. Then when price reaches past here and creates the high of the candle, comes back down and closes here, we call this a range. Okay. So in trading, you're always looking for ranges and liquidity wicks, and this is how the representation, sorry about that, guys, this is the representation of a bullish candle. Pretty cool, pretty easy, pretty simple. And as you can see, I'm just going to go over again. Price opened here, price closed here, price closed above 100, closing at 150, giving it a bullish candle. And before I move on, I just want to teach you a little bit on the pip side. So if price went from 145, 100 to 145, 150, you call this 5 pips. So we actually call this 5 pips. Let me just erase this here. Okay, so what we're saying here is price moved 5 pips. Now you may be asking, I don't understand what 5 pips is. Well, we will discuss this in the future videos, but what I'm saying here is you've got a 5 pip candle, bearing in mind you haven't taken this into account, this wick and this wick. Let's call it, if you look at this, 2 pips here, 2 pip movement, same size here, 2 pip. Okay, so what we have here is 5 plus 2 is 7 plus 2 is 9. Therefore this candle moved 11 pips, 9 pips in total. 5, 6, 7, 8, 9 pips in total, and the body of the candle was 5 pips because we created a high and we created a low. Pretty simple, guys. Very cool. Alright, let's move on. The next thing we're going to look at is a bearish candle. So this here being red going down is what we call a bearish candle. So what I'm going to show you here is the exact opposite of a bullish candle. Okay, normally red in color, it's just the way that they've done it in Forex. Red going down, green going up, bulls, bears. Okay, so what we have here is we have let's change this color as well to red. Okay, so what we have here is the opening of the candle right there, and as you can see, price is at 145.250. so what generally happens here is price opens here, price moves up, creates a high, then retraces back down, creates this body, keeps going down, goes all the way down to here, creates a low, comes back up and closes here. It's the exact opposite as a bullish candle, and we call this a bearish candle. And as you can see here, the price opens at 145.250, okay, and closes at 145.150 as an example. That there is 10 pips. So this candle closed 10 pips lower than when it started. So basically price closed lower than where it started. Now let me just get my eraser, because I'm sure you guys understand that. It's pretty simple. Okay, alright, so the same as what we say on this candle is a range and this is a liquidity wick. On a bearish candle it's the opposite. A liquidity wick comes from the top, goes to create a high, comes back down, continues down, right, moves back down, comes back up, and then we have a range. So we have the liquidity wick on top and the range at the bottom. Why we say a range is that you'll learn further on in Forex once you decide, is that this candle closing here and this range here means that price has a very good possibility of continuing down, especially if this low is broken. Price can continue down, and it's a bearish candle, so you would sell. Pretty cool. Alright, now that I've made that clear, let's move on to the next thing. Alright, so candles with no wicks usually means no range for the next candle to fill. When a candle closes with no wick, it also means there's a 50-50 chance price will move either way, which is a poor probability in executing a trade. So in other words, if a candle has no wick, you don't want to execute a trade because you have a 50-50 chance of it working out. Let me give you an example here. Okay, let's draw up a bearish candle. So we have a wick over here. It's a very big candle, don't stress. Alright, there. Okay, let's call this the candle. So what we have here, okay, is that price opened here, moved up to here, created a liquidity wick, came down and closed here, not creating a wick here. So the fact that it didn't create a wick over here means that there's no range for the next candle to continue down. Now, yes, it can continue down. The next candle could continue down, but it's a 50-50 chance, because what could just as easily happen, because there's no range, is you could have this situation. Let's just erase this and this. Yeah. Okay. And let's draw. You could easily there. So in this situation, what you have is exactly the opposite of this. So in saying that, same situation, you have your wick and price continues up and closes there. Now the fact that there's no wick here, or should I say here, there's no wick, means again that there is a 50-50 chance for price to move, to continue. Continue moving in your direction. Okay, so what you have here is a 50-50 chance that the next candle will continue moving up. Guys, you definitely don't want to execute trades on this. This is a high volatile. These kind of candles occur during high volatility, and it's not a good idea. But I just thought, let me show you these candles. Alright, let's just clear all drawings, and let's move on. Okay, so I've explained liquidity wicks, I've explained ranges, price movement in a candle. As you can see here, price moving here, price there, price moves from 100 up to 150, that's where the candle closes, and that shows you a bullish candle, and the opposite for bearish. Alright, let's move on. Alright, moving on to time frames. Okay, so I'm going to show you guys 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly and monthly. We're going to use TradingView as an example, just to make it easier for you guys to, so you can actually see how exactly it works. Alright guys, so here we have tradingview.com, which is going to be on another one of my videos, and we have the pair, the GJ, Great British Pound and Japanese Yen. And as you look to the right here, you see price. So as you can see, price going up 880, 900, 920, 940, just like we discussed on the candles. And here you have your candles. Pretty cool. So over here we've got the 5 minute candles. So each one of these candles, like explained, represents 5 minutes. So let's take this candle for example. This is fantastic. Let's take this candle here. This candle, this is where the candle opened, then the candle came down to here, created the liquidity wick and closed here. So that is a representation of a 5-minute candle. Now, the next candles that we have is a 15-minute candle. So, if you look at this one 15-minute candle, it represents 3 5-minute candles. 1, 2, 3. So these 3 candles combined equals to this one candle. Pretty cool. Then you have the 30 minutes. Same story, same thing applies. You have one 30-minute candle. It represents 2 15-minute candles. Okay. Then the next thing we have here is the 1-hour candle. Each one of these candles represents a 1-hour time frame. So this is candle movement over each hour, and there's the time at the bottom. So if I hover over and you look down, 10th of March 2021, 9 p.m. local time, that was the candle. Next one, 10 p.m. This is where the candle opened, and it's currently open with 48 minutes to go. Pretty cool. I'm not going to show you guys the 2-hour, definitely don't need it. Okay, this here represents the 4-hour candle. If I shrink this down, this is price movement over each 4 hours. So let's take this 4-hour candle. This 4-hour candle opened 2 hours ago. It still has 1 hour and 48 minutes to go. If we drop down to the 1 hour, we should have, so what we do is take the 4-hour, opened it there, go down to the 1 hour. What we have is 1, 2, the 3rd hour is open, and after this will be one more candle. So this 3 candles represents this 4-hour, which still has 1 hour and 47 seconds to go. 1 hour and 47 minutes to go. Sorry about that. Okay. Next, we have the daily. So this is price movement for the day. As you can see, it's a very bullish candle. Yes, I know my candles are blue and red. I just prefer it that way. I made those adjustments. So let's take a look at the daily. We shrink this down. As you can see, we have been completely bullish for a very long time, because even if I come down, you can see here how unbelievably bullish we are. Look at how few red candles there are. Anyway, this is just about time frames, so let's keep going on the time frames. Okay, so as you can see, one daily candle. Okay, then this, if I have to shrink this down, this is the weekly candle, and then you get the monthly candle, which will be very big. Okay, I mean, I know you guys don't understand it yet, but just to give you an example, this monthly candle has already moved 324 pips bullish, and we're only 10 days into the month. Cool. Alright, let's just scroll back down. This is how we go down to 30. Let's just get this all. Alright. So guys, this was just, I'm just giving you a glimpse into time frames. Now, honestly, you shouldn't worry about the 1 minute or the 5 minute. You can use the 15, but you trade off the 30, the 1 hour, the 4 hour. You have the higher confirmations come off the higher time frames. But again, this is something you'll learn later on. this is just a representation to show you the time frames. So I hope that you all enjoyed that and you understand. If not, let me know. I can explain it to you in a better format and try to get you all to understand. Otherwise, guys, do me a favor, go like the video, subscribe, just so that you can follow when the next video is posted, because I don't post every day. I post every few days while I'm busy making the videos up and everything for everyone. And let's get things rolling. Cool, guys. Have a fantastic evening or a fantastic day.